5,700 and then 5,680. 5,680 is a big spot. So for anybody that's in this small size short that we're in, it's like a 1/3 size with 2.5 weeks of time, or roughly about 2 weeks. This could be a mistake. It might be or might not be. We kind of have to assess the open. So how do I want to say this? So in the morning, everybody knows I'm flying out. I have to fly out first thing in the morning, like really early. But I will put the morning post up, and then I will alert if I cut that 1/3 position. And I will also alert if I leave it as a hedge to a long on one or two other things, right? So what I might do is I might say, for example, let's say it opens up and then they drill it to 5,680, right? And then 5,680 holds. What I'll do is I might long Apple, Google, or a couple other stocks with time on them, and then leave that as a hedge, or cut it and re-hedge on a push up, if that makes sense. So that's a scenario. Or I'll give scenario or like options, like, okay, if you want to cut it here, you can cut it here. I'm going to leave this as a hedge, and I'm going to open up Apple calls for June, May, or I really like the Google skew as well. That's clean. Short-term Google calls, right? Because the thing is if Google and Apple push, the market stays up and it floats up to the upper levels, which would be near the upper golden pocket, which is a possibility, could get up in this area. There's a big seller sitting at 57.65 on SPX. So that's like, obviously, if we have these 2 weeks out and they're the 55.50 puts and we push up that high, those are going to get fucking smoked. So what we might do is cut it if it drops, or if it holds 5,700 off the open. We might just cut the hedges, take the L on the 1/3 size, this is why I told everybody before I alerted them. I said, look, if you have a small account, do not take it. And then if you have a medium to large account size, make sure you size it light, 1/3 max, because this was a scenario. This is why I'm very, very cautious. Yeah, exactly. Because I'm very cautious, especially fucking swinging over the weekend. I fucking hate it. Unless I have like high conviction, then I'll size it fucking heavy as hell. Okay. So now let's talk about geopolitics. And listen really carefully. Clay is recording this, so you guys can calibrate it. Okay. So in April, there's new tariffs there are new tariffs scheduled for, we know, April 2nd and April 15th. Okay. And typically, like in a regular market, none of this shit matters, right? It really doesn't, because it's either like, oh, market's trending up, we buy the fucking dip, blah, 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 or the market's, ranging, right? But this time right now is from now until, end of summer is really, really, really fucking important to keep a pulse on geopolitics, the effects on the market, the skew on certain stocks, key stocks, understanding what insiders are doing, understanding the positioning of the market, and managing your risk. It's a fucking like really challenging time to manage, because when the market gets over hedged to the downside, okay, this is really important. You do not see sharp declines. Sharp declines happen when there's complacency, right? It catches people off guard, and then sharp declines happen. Okay. So We know that there's tariffs scheduled for April 2nd and April 15th. Okay. There's also, Trump's been kind of lightly talking about discussing nuclear issues with Iran, which is definitely a trigger topic. It's not like that's a sensitive topic. Okay. That's a big deal that you should start to see some more news coming out. Okay. Um, you know, Based on some of the larger funds and stuff that I have connections with, you know, quantitative easing, it's a possibility that could arrive in the May or June FOMC. Okay. This is still a little early, in my opinion. Okay. But the thing is, the market has to drop, and give it that catch me off guard, significant, oh fuck, scare my shit out of my pants, I'm gonna poop kind of feeling. Like, fuck, that feeling. Do I really want to buy? Oh my God, oh my God, oh my God. That feeling, it needs that. You gotta have that. It has to happen because that drop, that significant drop, is the space that opens up for these large funds to, quote unquote, unsuspectingly swoop in and grab the shares when retail and the average investors are shitting themselves, thinking that the world's ending because the media is telling them to sell. Kramer, blah, 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 whatever, right? We all know the whole story and how that works. So, um, the thing is we know the drop is coming. Okay. We know this. So we know a new low is coming. However, it's the timing of the drop that is really fucking hard. I don't care if you're a quant, I don't care if you're an insider or who you are. It's really hard to understand the timing of the drop unless you fucking know, because you know the guy who's pushing the trigger or pushing all the big buttons, right? The fat fingers. So I just dropped a lot of fucking information right there. Okay. So we also have a meeting with Putin and T Rump that's scheduled after Ramadan. Okay. So um, what I'm kind of seeing right now, based on the skew um, uh, and the VIX on VIX and SPX, is it's actually like it's starting to be more supportive. I would say it's more neutral than supportive, but it's starting to be. So that's why right now I want to be very neutral going into this week. And then we will assess. And if we get an opportunity, say, for example, say for tomorrow, market opens and we hold above 5,700. Well, we're going to cut the hedges. Okay. We'll cut them or sorry, cut the 1/3 puts, and the downside plays. We'll just cut them. Take the loss. It shouldn't be too damaging. It's just 1/3 size, small size, nothing fancy. This happens. We make mistakes. We bet literally. I can't remember a swing that's gone like wrong, over a weekend in a while. We've had a fucking hell of a run. So, that this is on me. I take accountability on this mistake. We'll see where we open. If it is a mistake, if it's not, and we can get out at even, we will. But right now, I really want to be cautious. This week in particular, positioning is bearish. But that doesn't mean that means that we're going to go down. So if we get under, so here's some levels, and you guys can reflect on this, and I'll have all the pivots posted every single morning. And then I'll be live talking, but not live streaming on Tuesday. Monday, I won't be live streaming or live talking. I'm flying out early in the morning, like really fucking early. I just booked a flight. I just got to get out of town. So, and I'll be back Wednesday afternoon, and then regular scheduled. We fucking crush it every day. Thursday on. Okay, so that's the update on that. So, let me think here. What else? Also, my buddy was telling me that one of my other buddies was telling me that there's a good chance that funds might start to offset their significant losses through like tax loss harvesting around the April OPEX. Okay. There's no, so what we could see is something significant. They could delay this whole downside move a bit, right? So I'm not 100% in like high conviction on what's going to happen between now and the end of March. So that's basically a week, right? I want to stay very neutral. Okay, I want to take it day by day, but I will 100% say with conviction the bottom is not in yet. Okay. Okay. This would be considered like a temporary bottom, right? So, um, any questions on the geopolitics, the things that we have coming up, and all that shit? Okay, there's a lot to unpack there, but I really want y'all to understand like what's going on because it's important as a trader. And then you guys see me flip on a dime or something, it like you got to realize like things change fast, and that's our job as a trader is to be nimble and move with the markets, not against them. The worst thing you can do as a trader is hold for hope, right? And not be aware of or own a mistake or a misread, and then not flip, right? It's better to say, okay, cut the one third puts it open for whatever 35% loss, whatever it is, and then flip long. And then if you don't do that and all of a sudden you're like 50, 60% down, it's like, well, what the fuck? Why would you want to think like that? Because at the end of the day, you cut for a 35% loss on a one third size, and then you hit one or two nice clean trades this week, and loss is wiped out. However, psychologically, you really want to be thinking about not trying to make up the loss. It's really important as a trader. You don't want to try to make up that loss. You want to just focus on executing that specific trade that you take or that's alerted to the best of your abilities without oversizing, execute it to the process, and then lock your money in. Don't hold for hope. Don't be greedy, and go on to the next trade, because you know that out of 10 trades, minimum 70% of those trades are going to be winning percentage over 30%. And if we manage those other three, you're going to make up that loss quick, right? So that's really important. And so for everybody that's listening to this, it's not about, like, as a trader, as an investor, whatever, mainly as a day trader, it's never about, um, you know, the winning trades. It's what really defines you as a trader and as a person, really in general, is how you handle losses. And most importantly, as a trader, how we manage it. It's really, really important to understand there is an art and a mastery of managing a losing trade, because nobody knows. Let's just say, for example, we open up here 5,700 on the button. We don't know what the market does at open. Okay, most likely based on this candle and this candle and this candle reaction, we could say we could see a downside move, right? So even though we're say for example the 1/3 put swings that we have for a couple weeks out, say they're open up minus 30%. You're thinking in your head, okay, all right, how do I want to manage this? I'm trying to make sure I don't incur a larger loss, right? But also, if this thing slides down, you can maybe get out for break even, or maybe just a little nick of minus 5%, which would still be a success. So managing the loss or a lot losing trade is way more important than really managing a winner trade. Winning trades are great. It's great. But like how you manage your losses really defines your P&L, because it sets the tone for how you feel. Like you really want to like give yourself a pat on the back for managing a loss well, for cutting it when you stop out at minus 15%, right? Or minus 20%, whatever or maybe it breaks, it holds 5,700 in the first half hour in that first. So one thing I want to talk about is in the open, the first 30 minutes is what I like to call the volatility range. What I mean by that, I kind of made it up. It's like what happens, right? You have all this hedging and buying and all this shit happening, and the market goes like this, right? It's like fucking crazy. Well, what's happening is there's algos and there's funds buying and selling in that first hour, and they're selling. And so there's like massive move down and boom, it bounces. Massive move up and boom, it rejects, right? That volatile range is what is defining the open. So if you see a push down and boom, fucking 56.90 holds hard, well, you really want to consider cutting. Okay. If it bounces real hard in that 15-minute wick and it holds 5,700, because that's telling you that right off the open that funds are seeing this as an opportunity to buy, and the likelihood of a gap fill is minimal. Okay. Because they can fill the gap later. They don't have to fill it tomorrow. Right. And if they do, because think about this, we don't know, like, I know positioning going into tomorrow, and on SPX, let me pull it up. So from Friday, we have 160 million sitting in puts on SPX and 55 million in calls. So this will refresh in the morning for me, and I'll know positioning. So at the end of the day, this is a squeeze setup. Now, what we want to be looking for, now, which we could do right now, I'll pull up my chain, and we want to see a couple things. And this can help us understand if we want to cut our position right at the fucking open, or if we could see a possible slide and gap fill and then get out, right? So what I like to do is this. So I like to pull up the SPX chain and I'll pull up tomorrow's strike, right? March 24th. And what I'll do right now, because it's you can buy right now, people can buy. So I'm going to scroll down and I'm going to look at size. I'm going to look at the volume on the chain. All right, you guys following along, right? If you guys want, you can follow along. I'm not going to do this on the stream, but I'm going to do it like talking so we all can go through. So what you want to do is, say, for example, you have your IBK, or sorry, your Webull, right? Pull up your phone, pull up your Webull, and you should your Webull chain, okay? And what we're looking at, okay, is the volume, okay? And we're going to scroll down, okay? And we're going to look for significant volume on the Webull chain underneath us on put side and call side. Interrupt me if you have any questions at all. And just because you see significant volume way out of the money, the premium of that volume needs to be logical. What do I mean by logical? I mean, like, if you see, 500 contracts bought for 50 cents, like, who gives a shit? Like, what I mean, like, logical and relevant based on a possible uh, directional play by a big player is like 200 grand in premium, 150 grand on multiple strikes, right? So based on what I know for how the positioning is for tomorrow, it's actually a bearish chain. However, if we see, multiple big block orders, and how do we do look at that? We say, oh, wow, let's take a look at uh 5700, right? The 5700 calls, there's 193 volume and they cost $20 per. Okay. Now let's go take a look at the tape, the tick by tick. So I scroll down the tick by tick, the time in sales, right? And I'm scrolling down and I just see one, 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 one. I don't see like significant amount of calls being bought, right? Like, meaning the only time I see something significantly bought was right at the open. Somebody bought, what was that, 29 and 19. That's some player, I could say, bought, was it 20, 53 calls for $20 per. So 53 times 2,000, that's 100 grand, right? So this dude put 100K on the tape as soon as futures opened on an upside play at the money. That's significant, right? Now, the question is this a scalp? Now, is this a scalp? Or is this guy already know we're going to squeeze, right? Is he targeting a higher level, right? So go ahead. Somebody talking? Does this make sense? Throw a throw a 3 in the chat if it makes sense. It's important. You have to be able to read the tape if you want to be a great trader.
Hey, Sales, you're looking at which expiry?
Tomorrow.
Okay.
Yeah, set 5700s is like 195 volume or something like that. And then if you go to the very opening print at 1715, so it'd be 8:15 Eastern time, you can see that there was a $29 or 29 calls bought in a print, and at the same time there was 4, and then there was 19, and then there was 2. That's 100 grand bought in at the same time, right? You see that? He bought them at 2050, and then there was 2 more bought at 2070. You do the math on that, that's a little over 100K. Right? You guys following me? Okay. So he's not in profit. Okay? He's not in profit. Uh, 5,600 calls. Let me see here. Yeah, somebody bought 9 of them. I see that. Those are 10K a pop, so that's about 100, or yeah, about 100K order there too. And though, yeah, let me see here. Yeah, so these guys are underwater right now. Both of them are roughly, like, they're kind of like flat. And so this is really important to understand, because when we watch the tape, or you want to understand, like, for example, for our situation, we want to be like, well, are we going to cut these 1/3 hedges, or because you know what, at the end of the day, yeah, sure, you might not have a lot of action on this, or you might not have any, but this is important because how I'm looking at this from, because, like, for all you guys know, I have 30,000 in puts, right? You guys don't know how much money I have for a 1/3 size. Nobody does, right? And for me, I'm not trying to fuck around. I'm not just trying to be like, oh well, shit, I swung puts and oh, I'm red, so I don't know what to do. No, I'm just trying to strategically pick apart and understand exactly what I need to do. Because if I know that there's 160 million in puts expiring tomorrow on 0DTE and they're mainly above us, which is suppressive for price, and then I see that they could actually squeeze us, and then they're adding another couple $100,000, and then I see more and more money hitting on the call side, I'm gonna know like shit, I gotta get the fuck out, write it open as long as 5,700 holds. If 5,700 breaks, the 5 minute read fails, and then that 30-minute velocity window where we have all that dynamic hedging going on, and boom, 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 or fucking price action's crazy, and you really don't want to be trading on SPX when that shit happens, and it flushes and holds 5690. I'm gonna think like to myself, all right, these guys are still in, and I'm looking at the chain at that moment as well, and I'm thinking, fuck, are they loading puts? Are they loading at the money puts? Are their puts being loaded? Are we going to slide even more downside? Are they going to force these calls out? Is there call selling? So like you kind of want to think about the whole picture, and they're like, okay, you know what? They're loading more puts. I'm gonna fucking hold, and you know what? I might take puts here too, and then I cover my loss because I'm taking 0DTE, and I'm already holding my other puts, and then I cut my puts for maybe my swing puts for maybe a 15% loss, and then I make 35-40% on 0DTEs. You guys see how that kind of like runs through. So, but it's all the preparation that it takes in order to prepare yourself for the open, right? And so when it comes to the open, I'm gonna know what the fuck I'm gonna do, and I'm gonna let all you guys know, like, okay, this is the deal, and then I'll put that in the morning write up. If this breaks, watch this level, watch the 30-minute print on the open, and where it wicks off of on the top side and on the bottom side. If 5,700 holds, then we're gonna want to probably cut these puts for loss, or what you could do is grab call side 1 DTE slightly out of the money, maybe 25 delta, hedge the puts right for 2 weeks out, and then take the call side long, and then if the market breaks this wick over here, then we cut the puts and then look for a better opportunity to get into put side. That was a lot. I just fired off a lot of shit. Sorry. But I hope you guys picked up on that. That makes sense? That's how you have to manage it, because this is how this shit works, okay? Because if you guys are trading like $1,000, $5,000, that's great. But what's going to happen when you're trading like 15, 20, 30,000 blocks on swings, right? Because it's going to happen. You're going to build your accounts. This is what everybody does in here. We got a handful of people just since December took their counts from 5K to well over 35,000. PB's on here. He's one of the guys. So, and he's taking all this information in, he's applying it, and he's understanding, right? So he ain't gonna fuck around tomorrow. He knows how much he needs to manage risk, and he sure as hell ain't gonna fucking hold for hope because it's bit him in the ass before, right? So, just like everybody, and this is why we learn, and we gotta really, really manage that. And so, when you sit there and try to hold and hope, and you're like, oh fuck, please go down, please, like that's the worst emotion ever as a trader. Okay. So we just got to look at the data, analyze it, break it down, and rock and roll. Max, did you just hop on? I didn't see. Hey, Mr. Trades, you just hop on?
Yup.
Did you hear? You didn't hear anything I said about the geopolitical shit, did you?
No.
Fuck. All right, I'm gonna run through it really quick. You got to hear this, okay?
All right. Sounds good.
I'm gonna go fast, okay? All right. So I'm going to run through this because a lot of people just hopped on recently. I'm going to run through this really fast. This is recorded. So if you miss it, you can just listen again. All right. So right now, in this moment, because Trump dropped all this what do you call it? Possible bargaining of the tariffs, right? That was something that I was expecting to happen in 2 weeks, right? So the right now, I'm not 100% like, man, I know this is going to happen from now until March 31st. So we're going to manage the put swings that we got into 1/3 size of open, and we're not going to hold for hope. And right now, I want to take it day by day. We'll assess it off the open, but without a doubt, this is not the fucking bottom. I just think that it's probably a temporary one. With that being said, okay. With that being said, the market is not going to see sharp, fast declines when it's hedged. When the market's hedged, overly hedged, it's not going to see fast declines. Complacency, complacency is when that happens. Okay, just remember that, especially because over the next months, we're going to see up, down, chop, sideways. Now, if we get that quick low fast, catching people off guard, great. Hopefully, we're in position and ready to go. So then there is talk that they might start doing QE either May or June. Okay, I think it's probably a little early. I'm expecting end of the summer personally. Like July OPEX, roughly end of that summer. Like that's what I'm expecting. So for me, there's a couple things that we want to look at. We have Trump and Putin who have a meeting after Ramadan scheduled. Okay, so volatility on like a fixed strike basis, right, is actually decreased going into April. So the skew is shorter, right? So I'm gonna monitor this as well. And then there are the new tariffs that are planned right now are for April 2nd and April 15th. And then also, which I don't know if has been highly talked about, but Trump has started discussing nuclear issues with Iran, which is it's a sensitive topic. That's a big fucking deal. But we might start hearing a little bit more about that. Okay. The market's basically in a full, or it still is in like a full of like uncertainty and high institutional leverages, right? So with that being said, we want to just be cautious, okay? Play range to range, and then understand when the market's getting complacent. This week, I want to talk about this is really important. This week, all right, we have PMI on Monday, right? Let me just double check one thing here. PMI has a tendency to dump us, okay? What's the other one? It's PMI and PMI. It's like there's another MI, right? What the hell is it? Is it anybody know? I forget it. It's right on the tip of my tongue. Fuck. Anybody want to help? What is it? ISM. Yes. Thank you. Thank you. So I'm pretty sure it's PMI that has the high tendency to dump us. Okay. So with that being said, how are you guys going to know if we're going to dump? Anyone know? Watching the chain off the open into data. If you guys see puts being loaded, right? So this is the easiest way to do it. we're at 5,700 and the calls are not getting the volume. Call side, 5720s, 5725s, 5730s, 5735s, 5740s. They're not getting significant volume up the chain, 2 to 4x, right? Like solid volume. Then, and you start seeing volume hitting the tape on, 5690s, 5680s, 5685s, 5675s, right? You see it seeing put volume. You can expect a downside move, right? So that's something really important that you want to be paying attention to. PMI, as I said, has a tendency to drill us. So doesn't mean it's going to, but it's definitely something we want to be aware of. Let me pull up the thing. All right, so we have Bostic is speaking. Then we have a lot of Fed speaking this week. So you could get a little bit of whipsaw and Michigan consumer sentiment. That's Friday. We also have a really big one, guys. GDP. GDP is oh boy. GDP is Thursday. So from a positioning and like kind of like a let's go right back to what I said. The market loves to catch or loves to decline off complacency, right? So if we start squeezing, right? Let's just say tomorrow, right? Tomorrow we open up and they hold this range and we cut our put swings, right? And then they hold, they pop it and then they start squeezing it, right? And they get up here and then they just hold it Monday, Tuesday, Wednesday, maybe squeeze it a little bit higher up into this other fib I have up here, right? And then comes GDP. GDP is not going up. It ain't fucking going up. If they rip us into GDP, I will swing puts. Fuck yes, I will. I don't think there's no fucking way GDP is the reason why we're down here. Because does anybody know what the tariffs do and what the administration is doing to our economy? So it doesn't really matter. Look, at the end of the day, I believe, it doesn't matter what I believe or you believe, but at the end of the day, the administration is doing whatever they can to stamp inflation out and make the economy healthy, right? And I'll be dead honest with you. Like the reality is we all know about the bullshit spending that the previous administration did. We all know that. But the thing is, and obviously it was bullshit. We all know that. It's just ridiculous. I don't want to get into it. It's not about politics. But the point is that money, even as corrupt as it was, actually was a GDP booster, right? So by taking away that corrupt money, that's sucking the GDP back down to reality, right? And it's going to crush inflation down, which is going to force the Fed to cut. Maybe, yeah. So that would be QE, right? Now, and so when you have that dynamic, okay, and then GDP is going down, that's compression on the economy. You cannot have an economy with a declining GDP going down and the stock market going up. It doesn't happen. Doesn't happen. They give us 5,800. I will fucking short full port. Not zeros, but I will short full port, swing that shit. And then if they even squeeze it a little higher, I'll load it even more and buy time. It's not gonna keep going. It's just not. Okay? So this is the reality of it. You look at business dynamics, you look at earnings, you look at, the GDP, the economy. GDP is the underpinning of the economy. That's just it's a fact. It's just the way it is. Why are large funds like, I'm not going to bring his name up, but one of my close friends who, is one of the top analysts for probably one of the largest and actually the number one performing hedge fund. Why are they not buying? Are they positioned and already in the market? Yeah, for sure. Who isn't, right? For large funds, but they're not buying here. They're not rolling all their hedges off. Why? Because of these reasons, right? Because they know there's more pain coming. Okay. And so this the perspective on geopolitics, on the economy, on where we are at, you know, what is going to give us that, you know, gap down, gap down, gap down, and then all of a sudden it's like, oh shit, we're at 5,300, right? You know, what is that? That's when we can get people complacent, right? So that's what we really want to be looking for, in my opinion. Okay. So they can catch people off guard here this week, right? You know, they could be everybody long and happy and, you know, just nice low volume pump up and, you know, float this baby up and keep it strong, looking strong. And, you know, all retail's long. And then all of a sudden, GDP gaps is down. And then all of a sudden, we're back at 5650. And then PCE comes out. Oh, and that's down. And then the weekend comes and they're, oh shit, Trump's still full bore on the tariffs. And then another gap down, and then another gap down. And all of a sudden we're sitting here at all of a sudden we're sitting here at, you know, the first week of April, we're at fucking 5,400 or 5,450, and we're just like, oh shit, right? So like just the perspective on how fast the market can move and catch people off guard is really, really important to understand, right? And if you stomp out for a tiny loss and then all of a sudden it goes and you're like, do not beat yourself up. This market is fucking hard, you know? And so, you know, we need more liquidity in the markets to go down.
啊，爷爷咬不动的样子。
So, these are the things that I just like, I think are really important, aside from the charts and the technicals, are really important to understand. So moving forward, this is what we're going to do. We're going to take it day by day until I pin down a read or we catch a really outsized move, right? Meaning, for example, let's just say right here, let's just say this is, so we have the 13 on the hourly. Let's just use the 4-hour. Okay. Let's say we start squeezing. We chop here, flag, and they rip it, right? And they shoot us up into my golden pocket. So this golden pocket is golden. Like, no pun intended, but seriously, it's fucking money. That's this level right here, this little zone. Okay. If they shoot us up here, and the EMAs, and the EMAs right here on the 13 on the 4-hour are lagging like this, and price is up here, extended away, you better fucking believe we're getting get ready to short this baby. Okay, this is an A plus. It will be an A plus setup for us, especially with data that's coming around the corner. We could buy some nice longer swings and load it up. So that's just one scenario that I'm looking at. All right, now let's take a look at some other stuff. We covered a little bit of the chain. All right. All right, there's that. Take that. Sorry, I'm making my notes here. Okay. All right, so based on Wyckoff structure, right? This is something I want to talk about. This 4-hour is in a bearish setup. Okay, so this thing is set up in an M here, and we could get one move up, and I'll be looking for this. and dump, right? So this is to me, this is setting up to distribute. It's just we don't know for a fact how high this thing can go. Okay, I'm looking at a trend line there as a possible area for rejection. And then I'm also looking at this as a spot. I don't know if they'll give it to us. We'll see. And right now, the facts are saying that we have the EMAs curling up. We have on the 4 hour, we already have a crossover. Let's take a look at the hourly. Okay, we're already crossed over on the hourly. We are extended, so this will be interesting to see if they hold this downtrend break, which you can see they're holding it by the wick, right? They want to hold this, right? You can see here's the downtrend right there, and this is holding very clear. If this breaks and fails, yeah, this thing's going back down. If we get under 56.50 and close, it's going to move down really fast. Like the market will move down probably 100 points really quick. All right. So key levels that I'm looking for a massive rejection. We have a huge seller on the tape of SPX just above my golden pocket on the bottom, right here at the CPI low print of October at 57.65. That's a big fucking spot, right? Under 50, then if say for example we don't get up there and tomorrow we reject here and we flush and we end up closing below 56.50 down in here, I'll be targeting 55.65. Okay, easy. It's going to move. If this thing closes under 56.50, it's going down 100 points or 980 to 100, pretty close, right? That's going to happen. All right, and that will kick in the distribution move down. We have the caller, or sorry, is it the quarterly? Yeah, the quarterly caller, or the monthly. My bad, the monthly pulling back, or at 55.65. My original thesis was if we start to bleed into the caller, and they actually get us under the caller by going into that, we're gonna drill hard. We're going to drill really hard. Now, that day, I'm going to talk about that day too. Shit, there's a lot of code. Fuck. Okay, so I'm going to talk about this day. So and I'll be talking about this particular day a lot, actually. So on, what was it? So we opened this room on August 30th, okay, of last year, and this is a really important conversation. So on September 30th, there was the same situation setting up with the caller, right? Monthly caller, and it was a big deal. And this I recognized a pattern that had happened in 2023 on November 30th, and I'll bring that up first, actually. And Clay, you remember how many days ahead of this reaction I called this fucking move and what was going to happen to the T on the timing? You remember how far in advance we were talking? I called this shit. This was crazy. Probably my best call out ever. April, all right, not there. 24, 23, November 8, 20. There we go, right there. He might be, who else is fair from the original? Cream. I know B17. Are you live? Are you here? Maybe. Hey, do you remember that September 30th day when we hit 2,500%? Those craziness, the fucking the nutty move. You guys, if you want to check my Twitter too, you can go back to that date and you can see the gains that was posted. And if you go back on my Twitter, if you don't believe me, you can go back on my Twitter and look on the Friday before, which was, I think it was the 24th or 25th of September. I posted on Twitter exactly what was going to happen. And look at this. Watch this. This is important for you guys to watch or look at. Where's the 30th? Okay. Here it is, right there. Okay, look at this. Okay. So this was where was the open? The open was Wednesday, Thursday, open right there. The market opened right here. Okay. And it whipsawed and then it slid down into the last 2 hours. Okay. This is really important, guys. Listen. It slid down in the last 2 hours. This is November 30th, 2023. And then what happened was the hourly popped. What was that? 20. Nothing crazy. What was that? 15 points, right? And then the next hour opened up and it went and retested the lows. Look at this. Watch this. The reason why this is important because this day, 10 grand turned into 900 grand on zeros. $10,000 turned into 900,000. That's a 9,000% play in an hour. And I'm not fucking kidding. Like, I'll never forget this day. And this taught me a lot about pattern recognition. So, yeah. So listen to this. This fucking hourly wicked down, drove down to 45, 42. And it drove up within 1 hour, 130 points. Think about that. 130 points in 1 hour on zeros. Yeah. It's fucking crazy. Why is this important? Why am I talking about fucking 2023? Who gives a fuck about that, right? I'll tell you why. Now let's go back and look at September 30th, 2024. Oh, what the fuck? Come on. Let me get it over there. July, September. Here we go. August. All right. Here, this is the day. So remember, you guys remember, that day it slid down into the last 2 hours, remember? It popped up, retested on the last hour, and then fucking rocketed, right? Now look at this, okay? This is the day. And here's the other day. And here's the low. On the hour, we'll just go the 2 hour low. There's the 2 hour, and there's the hourly. Okay? And here's the open. I don't know if Johnny remembers, but we were trading in a server together, and I was telling you guys, like, get ready, get ready, get ready, get ready. And it was fucking insane. All right, so this is the open. Look at this. Okay. So it basically is, so futures slid down, and this one popped up, chopped, shot up, trapped people going long, and then went from 57.36 all the way down to 5,700. And then in 2 hours, it shot up 65 points. You might be like, oh, well, 65 points. I mean, but in the last 2 hours, that's a big fucking move. That's a huge move. Huge move. Right? Actually, no, it was 2 p.m. algo kicked in. So this day yielded like it was like, I think the best moves was like 2,500 to 4,000%. That was, I think, what it was roughly on this type of move because of the speed and how fast it was, because it didn't close at the top. This happened between, the 2 p.m. algo, and then right there an hour before the close, and the move was done. Right? So why is this even important? Why am I flapping about this? Okay. It's because this particular setup's coming again. It's setting up again. Right? And that's going to be Monday, the 31st. Okay. Now, the tricky part is, how do you nail the move? Right? I have about 4 different patterns in my head that I'm prepared for this type of a day, based on history. Right? So I know what to expect, and I know what I'm going to be looking for. Would anybody have an idea what would cause this type of a move? This is life-changing money move right here. Like, this is fucking. I mean, you put $1,000 and you make 3,000%. You make a 30K. You know what I mean? You know what I'm saying? Shit, we hit 5,000%. You're like 50K. It's like, yeah, that's like really nice. You're paying some serious bills off if you need to. No, but what you're right. It's a monthly expiration. But what's gonna what like you guys hear me talk about specific things after the 2 p.m. algo? What are we gonna look for? And what can you look? What would cause this type of move? I'll let like couple. Yep. 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 Yeah. There we go. There we go. Okay. However, mastering. Now think about, we look for, what I say is look for 2 to 4x, right? This type of fucking move, you want to be looking for like 10x. Yeah, 10x. So on this move, you guys want to know how many fucking calls were hitting the tape? Multiple strikes up the fucking chain? It was like blocks of 5,000, 6,000, 10,000, like fucking crazy amounts of calls. Like fucking nuts. Yeah. And then it was just like, and it fucking just motored. You could not buy enough. And it was just like monster squeeze. So the thing is this. Here's the deal. JPM is fucked because they did not load enough puts on the downside for that caller. Right? And so they're not going to make money unless, what do they need to do? You do the math on 50,000 calls on 0 DTE on a 100-point move, and you think that they'll cover that loss in a second? You damn right they fucking will. Think about that. Who can push the market that fast? JPM, right? And they can create the move, right? However, you fucking scale. Actually, you do. You got to scale. If it happens, what you want to do is this. So, like, for example, you put $1,000 in, right? And you get the first move. You don't, you like, first of all, when I'm live, like this move to this on this day, I just kept saying, hold, hold, hold. Once we break this spot, I literally was like yelling at everybody, hold, hold. And once we break, I go, we're going to fucking rip. And that was the trigger, right? So we have Hawk in here. He's a trigger trader. I trigger trade too, but I prefer to get in before the trigger even hits, right? I like so a lot of the trades that I take, I get in and alert before everybody else does because the things that I'm reading, that's my style. Like I can pick up on stuff, and that's how I've designed my system, right? So, and that's fine. You grab calls here, you probably make 800%. Great. But we were in down here, right? Based on the data and all the stuff that I was seeing, right? And then I said, guys, so we were already up 1,500% here. And then what we did was we trimmed at the trigger, right? So that's the same shit. So for example, if we're, right here and the move, or hold on, let's go to the market, right? Let's go to our side of the market. Okay, let's say, come that day, I feel like that's something that makes the group and you admins stand out even more. The attention to detail, feel like so many would be freaking out. Oh yeah, dude. Yeah. Yeah. I mean, I'm hooting and hollering, but I'm managing the trade. You guys know, I'm keeping everybody in. That's why I live stream. That's why I get on voice, is because I want to make sure everybody's riding in the car with me, right? Because if I know we're gonna break, or if I know there's no reason to sell, let's just take this example, right? Let's say, let me think here. How do I want to do this? Let's just say, let me get rid of this trend line here. Okay. Let's say we know this is a key level, right? And this wick is the one I'm watching. And this opens up here at 5705 on that day. Let's just say hypothetically, okay? And it drops down, pops, and then it just starts sliding down. And we're not in yet because we don't see, we don't know if we're going to go up or down, and we haven't had confirmation yet. Okay, so let's just say we're here and we just start to slide down, like sometimes, right? In October of 2024, this happened. So in October of 2024, on the 31st, which is the same thing, the monthly expiration, right? This is what happened. Opened up and was like this. Boom, boom, boom. And then end of day, and it was just like this. Boom, fucking drilled, right? So at this point right here is when we would have gotten in roughly. Because unless I knew and I saw, right here in this area, or in this area, or in this area, unless I saw in these spots, right there or right there, a signal of what? Positioning, right? Because that is the trigger on the day, right? It's not the price, it's the positioning, because it's the positioning on the day of the monthly expiration when it's a big one, right? Or quarterly expiration, right? This is a quarterly, right? That really gives the fucking move, okay? So let's say we just got in here on this one right there. And we're like, well, it's okay. We're in, but they're in and we're going down. And we're riding, right? We're watching these wicks right here. We're not selling but we're going to take a little trim here. Why? Because the stop hunt comes right there off those candles, and then it gives us the big move. You take a trim right there, and then we wait for the stop hunt to fail, and then it gives us the real move, and then you go. At the end of the day, if we're moving up, right? Because in these types of moves, we have these situations, which a big part of my strategy is a reversion strategy. Call side, put side, right? Strong side, weak side. I'm sorry, that's from like Remember the Titans. But anyways, it's a reversion. We have an hourly setup here. Here's the EMAs. Okay, and we have price that moves away from the EMAs a specific amount. This is a statistical probability play. Yeah, that's a good movie. Yeah. So if price, why is this an important strategy? Okay, it's important because it works. It plays on behavior finance and market psychology. And it also plays on premium ranges, and it's a statistical play. Like, it's just every fucking time these types of things set up. However, you do have to be careful, and there's parameters within this to make sure you don't get hooked. But you can look back every single time on the hourly EMAs and say, wow, let me do this. Let me do this. Let me go SPX, because there's a lot of shit. No, what? I'll use ES because there's a lot of shit going on my SPY chart for US 500. There we go. What the fuck is this? Yuck. The hell? Ugh. All right. So this is really clean. This is easy to see. This is the hourly ES chart, and it's the same, right? So if I look here, 13 EMA, oops, it's stretched out. There's the extension away. Okay, every time extends away, comes in, extends away, comes in, extends away, comes in. Okay, however, sometimes you can see they float it, and then it comes in, and then it extends down, chops, and then reverts. Look what they did on OPEX day. Sometimes you'll see this. You see these hold 1 hour, 2 hour, and then boom, fucking rip it. Why is that? And why is that happening? What's happening actually? Do you guys know? Well, look at this one. This one started going and going. It really never got away, and then boom, it extends and snaps back. And as soon as it snaps back, boom, back down, and then rips back. This is fun vol right here. We caught all these fucking moves here in this room. You can go back and see all the fucking alerts. We caught every single reversion in that box. These were 60 to 100 point fucking moves on XPX that we caught in here. And that was from March 10th all the way to, oh no, that wasn't just all last week. It was more than that. Fuck, it was from February. Yeah, like February. It was from like February 28th. Yeah, we were catching all these fucking reversions, every single one, up and down, you name it. And we were playing this, right? Based on my pivots, gamma, Vana, charm, you name it. We're playing all this shit. And it just works all the time. This is how I set up swings as well. So let's look at the box here. Okay. Pretty simple. Let me make this bigger. This is the hourly. Okay. Extension into it. You cannot find one move that doesn't get away, that doesn't revert back in. You can't. You can't. You just can't. You're just not going to find it ever, 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 ever. Every time it doesn't. Let's go back and go get crazy and go look at COVID. Or yeah, let's see if I can get back there on the 1 hour. I don't know if I can, if I have enough, whatever you call it. Come on, give it to me. Oh, is that it? No, they gave me 21. All right, let me go 2 hour. Okay, perfect. Where's this nasty decline? Okay, this is COVID, right? And I mean, it's 2 hours. It's not even that big of a deal. It's the same shit, but pretty close. Pretty close. Look at this. I mean, literally the same things happening in the one of the nastiest declines we've ever seen. Look at that. Down, reverse, down, reverse, down, reverse, boom, reverse. Shoots up, slams, shoots up, slams down. Every time, even on the way down, it's boom, up, down, reverse, down, reverse. So even if you don't catch a short, right? Like let's say you don't even short this whole move down, right? And then what? What do? You're like, well, let me wait. Let me wait. Oh shit, I missed this move. Well, let me wait. I want to wait till it extends on the top side. Well, here's a supply. Let me short this. Oh, well, you just caught from here to fucking here in 4 hours. You know what I mean? Like you caught the over and then they overextended to the under. I mean, that's a massive fucking play, right? Are you guys seeing this? Throw a 3 in the chat if you like what I'm talking about here. If you don't throw a number. It's pretty badass in my opinion. This is how you make a lot of really big money with low risk. Yeah, it's the real deal stuff right here. What do funds do? Big funds do when what do big funds do when markets get overextended to the downside? Overreaction. They buy. Why do they buy? Hey, Mr. Trades, why would a fund buy when markets get overextended to the downside?
Because they're sitting on cash and they say, yo, soy.
Yes, sir. And what else are they doing? Right? They know there's value, right? So one of my buddies going into AVGO earnings, watch this. This is the same shit. Where's it at? Here was the earnings right here this day. I'll throw up the vertical line. There's the earning day. Okay. They bought here and they sold here. They did the same shit. Well, if you look at the daily, oh shoot, don't do that to me. All right, there we go. Look at this. What did they do? They did the same shit. It's the same thing on the daily. Like, look at that. Right? So they bought the overextension into obviously a big level on the daily 200, right? Away from the EMAs into literally, I mean, AVGO is like, it's like Nvidia's little brother. You know, they're like 1 and 2, right? Number 2, you know? And so you know, they bought the overextension into the earning print. They didn't buy the day before. They waited and then, or sorry, 2 days before. They bought the day, or no, the day of, to sell into it, the gap down and sell into it. They bought it and sold the rip. You know, you do 20, 30 million, 10, 15 million on that, and they're just flipping 50, you know, in a day. The same strategy, you guys, like literally the same shit. And that's that. The point is, you know, you don't have to be a rocket scientist to make money in the markets, right? You know, and also, really the main thing you got to do is understand your pattern, understand your strategy. Look at they cherry picked it right off the bottom. The furthest place it was ever away from the 13 since over here, which was this is pretty close. Yeah, pretty close to the same distance away. Look at the snapbacks on the daily. You could literally just do this and do 1-2 trades a year and you're good. Very, very basic, simple strategy. And you can just rinse and repeat. Just buy enough time, don't hot dog, and you're good. I mean, if you bought options on this day, you're still printing because it gapped up from 179, 180, and it gapped up and opened up at 190. So you could have bought at the money calls or slightly out of the money calls for a week out, and you would have gotten paid, right? It's just these are A+ setups, they're A+ strategies. There's no, oh well, you know what? I see flow. I see a bunch of flow on this ticker, so I'm just gonna go buy it. I don't, that's not my game, man. Like, I'm sorry, I don't do that. Like, do I watch flow? Yes, I do. Absolutely. But flow does not guarantee, and flow does not say, yeah, statistically, this is going to give me an 80 to 90% win rate. It just doesn't. It gives you a 70% chance you're going to get your fucking ass cooked if you keep doing it. That's what it does. So, this is an interesting setup. I was looking at positioning into MSTR for this week, actually the next couple of weeks. It's pretty bullish. So this is an upside play I really like. I don't see it extending more than this 344 level, actually. I think it's going to pop, come down, and then chop, and then launch. So I just want to be buying dips on MSTR. So how are we going to do that? Well, the personality of this particular stock, gap up and flush, and then rip later. Right? Gap up, flush, then rip later. Gap up, flush, rip later. That's the deal. This is how this thing gets played. So don't chase this. Right? If anything, short the top or short the open if it starts to reject a key level. What are our key levels above us? 314.75. And what's under us? 301 was it 301.54. We're in a massive flag. It's starting to pop. Most likely it's going to gap up. We'll see it maybe gaps up to 320.73. If it gaps up there, then it probably will catch people chasing, come back down. We'll see if it holds this level. If it holds this level, maybe it wicks under, creates a IHS. So let's just say, tomorrow it gaps up and then chops down, boom, wicks down. We'll grab that support off that middle of that flag and then look to see it pop up, retest, and then go. So a little IHS setup on the 4-hour. That's what I'm looking for right there on MSTR. Tesla. So we did a little bit EDU. And then we talked, BTC. All right, key spots on BTC before I get into Tesla. Okay, so I'm marking. So based on gamma combined with buyers and big sellers on the tape, these are my key levels. Okay, and I'm about to mark them down because I just noted them today. All right, so 70K, 80K, these are my big levels, so you can mark them with me if you want. All right, and then 84,000. And then let's see the level. And then 110,000. There we go. There's orders sitting at these levels. Big orders. So I'm going to plan. There. Those are the big spots for me. I'm going to change some of these colors. Actually, I'm going to make them purple, so I know that these are the most recent relevant levels, because I have other levels too. Purple, 70. We have this in a distribution setup. It could invalidate, but we have it distributing. So it doesn't mean that MSTR can't squeeze and go higher or hold in a holding pattern. So I'll be watching BTC. And then let me see here, MSTR. Coin is, the positioning is not that great. Oh yeah, now Tesla. Okay, for Tesla, there's Vanna resistance, like really strong Vanna resistance at 65. Where's my and that coincidentally is right underneath the 21 on the daily. Where's 65? Let me mark this down. 65. Okay, so a possible pattern that I can see is a gap up. If 65 rejects, it's a great short. Really, really, really good short. Then we could see it hopefully make a new low. I would love to see that. I want to be like, I'm already in some TSLL shares from these lows, but and a bunch of us should be because we were loading that up. But what I want to see is, I want to see a new low. I want to see a new low on TESS, and I want to see it. I want to see a massive gap up, hit that 65 early this week, and then look to swing short on it. I love Tesla. I own a Tesla. I'm long Tesla, but I'm talking a short trade. So that's Tesla. Let me think here. Let's take a look at NQ. Is RS on? RS, are you available to chat?
I'm over.
What are your thoughts on your levels above us on NQ?
Man, I think we go up first.
Well, I mean, yeah, I agree. But what are your levels above us? Because I'm gonna pull up my NQ levels and throw them up for everybody to see. The fuck are they? It's not these levels. I mean, these are a couple of them, but I have other levels too.
Give me 1 second.
Where the fuck is my NQ? There it is. Hold on, just give me a second here. Okay.
So I got anywhere between 20. Like if you go to the week on EQ real quick. And then click your adjusted. It'll be adjusted on real quick.
These are levels that I have based on gamma and structure.
Let me see, what number is
The
that?
the orange ones, my orange ones, those are the keys. Those are the big, big, big levels. So I have 20,173.09 above us.
Yep, that's fine. Yep, I got that.
And then if they clear that, it's gonna and hold it, it's gonna go to 20,319.47.
Yeah, I got that. And then
Okay.
they can probably they can push it all the way up to 2560 if they wanted to, but that'll take some pushing.
2560. Okay. I
And the
have
reason why, like, that's
okay.
like the actually, hold on. No, sorry. 2433.
20.
The 20. I got all my hold on. Here we go. 2354. Sorry about that.
It's all good.
Well, yeah, 2354 would be like my next level for us to push up to.
Okay, I want to put that level 23.
2354. So it's right above your 319.
Oh, so you're saying 20,000.
354. Yep.
Gotcha. Okay, perfect. 354. Perfect. All right, we're dialed in. So that would be like max range, right?
Yeah,
Because,
like um if we're gonna be bearish, that's what I wouldn't want to extend too much more than that.
okay.
We're gonna like continue back down. Because then what happens is if we continue back up, then we're looking at 2729. Because that's the 50% of that, like our most recent drop. So like the 4 red weeks that we've had,
Yeah.
50% of that is 2729. When we start reaching at the 50%, it starts to kind of like
Oh, 27. Okay. All right. Yeah, I have a 0.5 fib from all-time my fibs that I have right now are all-time high to the
yeah,
recent significant low. So my
yeah,
0.5 is at
seven, eight, two.
20,782.5. Yeah.
Yeah,
So
that's
that's
fine.
right
That's
under your spot. All
yeah.
right, perfect. All right. So now this is key. So so how I think we tackle this week is just like we have been, just take it like level to level, take the range as it comes. And then one thing I do want, I know RS knows this, but this line, I'm going to show the weekly, is the massive rising wedge. You guys can see this bottom, tap, 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 tap. This is a big deal. Look at the date, just look at the daily on this. Okay. All right. It's significant, tap, broke, flushed, fail, 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 and then hammer, and then gapped above today, right? So if we overextend up into that supply where RS was just talking about, that would be a really nice short to get off of. Man, because if they do break this previous high from last week, FOMC high, that's gonna line up really nice, dude. This is gonna be cool because then we could take it long above it, right? A hold above that, we take that shit right up to RS's level, 320, and then the 350 or 354. So that's what I like for NQ. NQ, BTC, MSTR, Tesla. I'll cover Google quick. Google's actually set up in a pretty good. It's in a pretty nice setup. It's probably going to gap in the morning. I'd like to see it come back in and retest, but I actually don't mind it long. The reason why is because first of all, the skews set up nice. Second of all, it's in a position.
I'm talking.
So it's in a position where if the markets push, who are they going to have to push? Google and Apple, right? These are lagging and they're going to have to push these two to pop it, right? So I don't mind taking longer dated calls on Apple, right? And then even shorter dated calls on Google. Okay. So we scalped this like a couple weeks ago or something on Google. But I do think it's setting up the compressions built. It's ready to go. So if they do continue to push us upside, these are going to be some of our top plays: Tesla, Google, Apple, MSTR for now. Small caps. Let's touch on 2 small caps before we rock and roll. Oklo has earnings. I like it. I'm not a huge fan of swinging through earnings, but it might not be a bad swing to maybe take small size through it. And if it dumps, if you buy time, it should be fine. Or we just wait and maybe IV flush it. So they have earning. Whoa, what? What the hell is this? Why does it say just? Oh no, they haven't reported yet. That was the previous. So the chain's pretty solid, nothing fancy. I do like it. I like the fact that it's broken out and it's structurally just climbing back up. You could see this move. And then the whole nuclear situation I was talking about earlier, this thing could catch a bid and squeeze, like really good. So maybe we take some, small size June calls on Oklo. We could take out of the money 45s, something, nothing too crazy, size it down. And if they flush it, we add to the position and hold. I actually really like that setup. If they let it rip and take it up, then they're great. It's a nice little sell in the morning. That's Oklo. D-Dog has been one that Hawk's been all over. This is an easy setup. Really nice call on his part. You can see here, same thing, compressing, pushing up. Really nice retest of the 101 level. Target would be 110 on this. So I don't mind buying dips off of the mid-range of D-Dog, right? The mid-range of the 4 hour. ASTS, another one that I like. What was there? 2 days investor. Okay. This is another one that I don't mind taking longer dated June calls on. Even trading weeklies on this isn't going to be a bad idea. Let's see where it opens up tomorrow. And this is another one that I'm really interested in trading. So ASTS, what was the other? Oh yeah, NVIDIA. Last one I want to talk about is NVIDIA. Yeah, NVIDIA, Meta, all of them. Yeah. So NVIDIA is looking really nice too. Let's take a look at the channel first. Draw this baby up. Yeah, there's going to be 2 trend lines here. Yeah, one there. I'm going to draw 2. Yep. Let's see how symmetrical that looks. Yeah, that's clean. All right. So NVIDIA, sorry for the delay there. This 4 hours coiled up. This thing can break either way. It's obviously in a bullish setup, right? Coiled up. Looks like it really wants to just go up to that upper trend line. I'll clean this up a little here. Nice little flag. You can see that it's pretty clean. If this thing breaks to the upside and we get above 120.60 to this 121.27, I would be targeting this supply right here at 125.62. I'm actually going to draw a trend or a spot there because that's going to be a key level. If they hold this, then it's going to go up to the upper trend line and up to 130, 130. If that happens, if NVIDIA starts to push, the market's going to absolutely rip. So I'm going to be targeting and looking at Tesla and then NVIDIA, right? The last thing I'm going to rip through is I'm going to go through the sectors really fast. Okay. All right, let me get the hell out of this. All right, volume up. All right, I'm going to go through really quick and then we'll end it. And if you guys have any questions, fire away. All right. XLK daily. Okay. To me, how I'm looking at this does not look bullish. Okay. Still looks like it's in distribution, right? This could be reaccumulation. We do have bullish divergence that is playing out to the upside. So this thing's going to gap up, and you have a crossover on the daily. This is not a bullish setup from a larger time frame setup. The weekly, however, there's some interesting candles. Huge buy volume on this weekly candle, right? And then it's just muted here. So they're going to gap it up. I'm going to be keeping an eye on XLK, actually. I'm going to be watching this spot pretty closely. You have a weekly crossover. This is a big deal. A pop-up on tech, without a reclaim is not going to be good. The last time they had a crossover, look at how long the crossover happened. Look, this is the last time they actually crossed. This was 2021. You had a significant decline, for multiple weeks. This was, January all the way into October. So let's go again. This was a rare one. This is February 2020. Quick crossover, dump to the 200 and rip. Okay. So they haven't crossed it over since. And now it's crossed. So that's why, you guys hear me talk about the geopolitics and how we're going to definitely make a new low, in my opinion. This is why. This isn't just why. This is, technically you can just see it, right? If you go based on history, the last two times, every single time since 2020 that we have had a crossover, it continues to go down. Yeah. All right. Now let's go XOP. No, I don't want to look at it. XOP is fine. The weekly looks good. Actually, looks really nice. I like oil. I like energy. I think it's coiling up for a bigger move. Which oil rip, tech drip. XLE energy looks great. This is my pattern for what the fuck? Oh no, never mind. That was X. Yeah. I have this thing ripping. So anytime you get a red day on energy, it's a buy the dip. June calls. Pretty simple. XLF. Things setting up actually for a larger move to the upside, but it has to clear the 200. Has to. The EMAs are starting to flatten out. Take a look at the daily. Yeah, it's a decision mode right here. You have a crossover. EMAs are holding and flattening out on the daily. Buy volume is starting to increase, right? And they didn't particularly buy the dip heavy. If you look at the volume, they bought it, but it wasn't like significant. And you can see like on these massive dumps, like there's no capitulatory volume. Like it's not like there's a selling climax on these. This XLY, this was all Tesla, I think, and Amazon dumping. Pretty good volume here on the sell side. But if we look at like significant bottoms, it's decent, nothing crazy. Same here. Go back to, where is this? 22. This was a significant bottom. Yeah, decent volume, just not quite the same. Like I'm looking at this volume right here at this bottom, and it's all selling. And then the buyers come in. Over here, it's not all selling. It's just it's like mixed and more buying. Okay. So we're gonna be watching that. Energy looks really good. Look at this. This is bullish. Buying, very little selling. Buying. Very, very bullish. Another energy play. This thing's coiling up too. XLU utilities. So if we start to see, utilities and energy starting to, stabilize or slightly dip or slightly catch a bid as tech starts to mute, we could suggest that there's going to be probably the sell-off's going to be around the corner. And then also one thing I also want to watch is the VIX. and how the VIX reacts. Okay, so that's the key sectors really, and then XLC, same thing. Like this is a bear flag on the weekly, or sorry, the daily. Another bear flag. Could it be reaccumulation down here? Massive buy volume Friday. Just no capitulatory volume, in my opinion. This is just muted, very controlled. It's called spot vol decay, or sorry, spot decay, where they just slowly walk it down and slowly exit. XBI, not a big deal. Just nice volume here. So, and this might not be a bad little spot to look at, like HD for a scalp too. Oh, looks like shit. There is bullish divergence though. Yeah, you know what? This might not be bad for a short-term trade. Let's take a look at the hourly. Wow, that's a lot of volume. What the fuck? Yeah, we'll keep an eye on this. This is interesting. All right, I want to pop over to the VIX really quick, or actually the dollar. Yeah, that was what I want to talk about. So the dollar. So this pattern's been playing out since late January perfectly. This is my daily chart on the DXY. You know, drop, pop, and then drill. Now base. I'm looking for a big move up on the dollar. If that's the case, then China is going to dump. This could be a redistribution. We have bearish divergence set it up really like nasty. This is nasty bearish divergence. So we could see China start to come down as money starts to rotate back into the US. Money starts to rotate back in the US, then vice versa. It could distribute back down and then roll back up. So I'll be watching the dollar and China to look for shorts. I'm not looking to long China right now. I think it's a bit overextended. So if the dollar stays down here and just stays bottoming, then obviously that's supportive for emerging markets. All right, last piece, VIX. Okay, VIX is in a falling wedge. Really nice falling wedge. Okay, and let's see if there's any bullish divergence setting up. Yes, there is. So if they gap us down, I'm gonna be watching the 4-hour VIX on the RSI to see if it hits this low, right around 34.77 roughly. I'm gonna be watching that spot on the 4-hour. So if they pop us, I want to watch to see if this bullish divergence holds, because if it doesn't, because I'm watching this as like a possible spring about to happen. If the VIX drills, I want to see it come down 57.14, or sorry, 17, 57, 1750, pop up, retest, and then go. Right? That would be a reaccumulation setup, right? And then it pops and then it goes. So that's things that I'm watching for on the VIX. Anybody have any questions? Perfect. Hour and 45 minutes. Not bad. And what do you know? They're holding that trend line perfectly. Look at that. Top, every little wick, just holding this in this spot right here. This is a big spot. I'm gonna move my trend line here. Or this, it's a trading range actually. There. What's the exact spot on this? 96.6. What the fuck? Did I miss that? No, 5702.4. Huh. There we go. That's better. Okay. So this thing looks like it's about to expand here tonight into the London. Yeah. If you guys are playing futures, I like it long. I like this long tonight on ES. And if in like personally, I'm gonna be watching. Where's my 80 level? 82. This is the spot right there. Right there. This is gonna be a pivot tomorrow for me. I'll make it bigger. Big boom. Make this one red. All right, yeah, the purple line, 5681.4 to 5682 is going to be a pivot if they bring her down. And I would be looking to take longs off a hold of that level. Other than that, that's about it, guys. Hope you guys enjoyed the EDU. If you have any questions, fire away. Like I said, for those that are new, I'm going to be out Monday, and then I'm flying out of town Monday. I'll be back Wednesday. I won't be streaming. If RS or anybody else wants to stream and run the show, feel free. If not, no big deal. I will be putting out my morning post and the pivots and all that good stuff. And then if I cut, trim, or whatever on the 1/3 SPY puts that we have for 4/4. And I think that's it. Then Thursday I'll be back in business as normal. And Tuesday, most likely, I'll be on live voice, but I won't be streaming. All right. Have a great night. And guys, remember, protect your fucking capital. Protect the capital. And lock in the money because there's big moves coming. And you don't need to catch the whole meat of the move. You just got to catch a slice of it. Because you know what? The more you stack your capital, the more money you have for when you see or we see the big trade set up, and then you can throw some more cheese on it. Okay. All right. Love you guys. Have a good night. Rest up. I'll see you in the morning, or I'll be in chat in the morning. All right. Peace. Thank you guys.